Welcome to Beyond the Press Release, our production of Gore Call, in which we take the time to speak with small cap executives after they put out big news. With us today, happy to have him back, especially with what's happening in Russia and Ukraine right now. Andrew Davidson is the CEO of Royal Helium, trades in Canada under RHC, for our friends in the US, RHCCF. Now, for those of you new to the story, if you think about balloons and blimps and think about helium, we wouldn't blame you, but you'd also be missing out on a much, much bigger picture, especially what's going on in Russia right now. Helium, beyond balloons, is a high-tech gas with many high-tech application uses. For example, MRI Magnets, Fibre Optic Cables, airbags, chips in our electronics, even cleaning the rocket fuel in tanks. But it's running into a supply problem. Demand from these high-tech applications is leading to rising prices. And they've been continuing to rise because Russia is one of the largest producers of helium in the world, and you know what's going on there with the sanctions. In comes Royal Helium. They're one of the largest landholders searching for helium, with over 1 million acres of prospective helium land, and they made one of the biggest helium discoveries in Saskatchewan history. Plans are for their first production sometime in 2022, and guys, listen to this, the economics are compelling. Each well has a capex about $1.5 million. Quick payback, 6 months, because these wells generate anywhere between $3 to $5 million per year, and they can go for 10 to 11 years. That's why Royal Helium is 8 Capital's top pick of 2022. Andy, welcome back, my friend.
Thanks for having me.
Hey.
Lots to talk about.
Yeah, well, before we go into the press release about you contract with the University of Regina for simulation modeling, we got to talk about the current state of the helium market and what the impact is as a result of Russia invading Ukraine.
Yeah, well, it's a two-pronged thing. So we have to start with the foundational knowledge that Russia is one of the top 3 helium producers in the world, supplying not just China, but all parts of the world, everyone that needs helium. So they had a big project set to come online in 2020, and then 2021, and then 2022. And that project fell behind again before this military action in the Ukraine. So the project was behind schedule already, and now with these actions and the sanctions in place, it's leaving a lot of customers scrambling to find long-term sources of helium, thinking that the Russian market is going to be closed for some period of time. And
yeah, you can bet on that.
So for groups like us and the other folks exploring for helium in North America, it's a big shot in the arm in terms of changing in pricing and even to the point of bringing more customers to the forefront. You know, whereas a lot of companies end up being reliant on the major industrial gas companies, given the supply shortages that existed before the Russian military action. They are moving further upstream to go straight to producer looking for volumes.
Well, let's talk about pricing for a second, just
Sure.
so, because the one thing about helium is it's not like all the commodities where it could just punch up the Chicago Board of Trade and look up gold, silver, wheat, and corn, all that. Just to give us perspective, what was the price of helium on average during 2021 before any of this stuff happened, and what's it looking like today?
Yeah, well, I mean, we look internally when we do our modeling and our economic forecast. We use the price of $250 Canadian per MCF. And, we used that throughout 2021. The price did rise in 2021, but we were comfortable with that. Since then, the world has changed remarkably. Offers that we had out and we're in negotiations with have all been pulled back now for repricing, because
Wow.
I'm not an economist, but I understand supply and demand, and most people do. And demand is rising, supply is falling, and falling dramatically today. So the pricing outlook is looking very, very strong. And certainly on the short-term contract basis, I mean, longer term, it's going to be likely a lower dollar contract. It's going to revert to the norms a bit, or the mean. But on shorter term, 3 to 5 year contracts, there is some significant pricing upside.
Are you able to give us a ballpark, what it looks like, spot? And not that you have to give away your pricing is, but
yeah.
Generally speaking, what's the market fetching right now?
Yeah, it's north of $400 an MCF for sure.
So you're talking about, it was about 250 last year. Now it's north of 400.
It's essentially, I mean, you're seeing pricing out there that is double what we model in our forecast.
And it's not as if your costs have changed. Nothing's changed on the cost side. So that's all bottom line profit.
Yeah, I mean, our costs are changing by a factor of inflation, like you would expect. for any company in any given year. So,
Yeah, minimal, nothing compared to the 60,
moderate
100%
increases
increase.
year over year, but nothing even close to what you're seeing on the pricing side. And that's applicable to everyone, right? Existing producers, new producers, anyone looking to contract for volumes now is benefiting.
Fair to say, I'm going to make an assumption here, but I know in my family's food business, when all the shortages started happening, we started getting calls from places we never expected.
Yeah.
The family business. So is it safe to assume that your phone's been ringing off the hook from potential customers that you never expected to hear from?
Yeah, certainly. I mean, we've received a number of interesting reach outs, be it from, many industries all the way down to, local and regional hospitals looking for security of supply. And, we we look forward to be able to produce into some of that supply shortage soon, which sort of brings us to another important point that that's impacting us and everyone else is
Supply chain.
So what we're seeing now is things that we had forecast to take 3 to 5 months are now forecast to take 6 to 9. And, that's for sourcing the parts for purification facilities. It's a time lag like everything else, everything you see in the retail or whatever industry you're in. Supply chains are getting crunched, and it's the same here. So,
I know people that can't get refrigerators.
Yeah.
They can't get refrigerators. They can't get generators. So, but it's not all bad news, is it, Andy? Because yes, on the one hand, you guys have probably been anxious to go into production, but the way I look at it is, as an investor myself, is the product sitting there in the ground. Your costs are only growing up with inflation.
Yeah.
But the price of what you've got, the value of what you've got in the ground,
Yeah.
is growing exponentially. So you're almost being paid to sit on the sidelines right now. So it's not so bad, is it?
No, it's not so bad. And frankly, we have to continue to define our reservoirs in our fields to determine where the most optimal place to produce from is. And we can do all that while we're waiting. I mean, we have the designs in place for our processing equipment. We are at the order point for that. And so that'll start that time clock. And in the intervening period, we get more wells ready to come online. So it's not as if we're sitting on our hands for the next 6 to 9 months. It's in fact just the opposite.
Yeah, no, I don't think anybody thought that. But and on the flip side, probably the most important thing to put out there is there aren't any problems with the project. There aren't any problems with. It's just you got to wait for this. You got to wait for your refrigerator to come in, and until then you can't refrigerate your beer.
No, all you can do is upgrade your existing assets, and that's what we're doing. So we high grade our assets with using the seismic programs and whatever else we're doing to determine where the best drill locations are, and we continue to drill them. And when those purifiers show up on site, we tie them in and off we go.
Let's talk about today's press release, because obviously I want to read the headline for everybody. Royal Helium contracts University of Regina for simulation modeling for the Nazar zone completions at Climax.
Yeah.
There's a lot to unpack there.
Yeah,
First of all, let's talk about the Nazar zone and what you've got there, because there are going to be a lot of new people to the story.
Sure. Well, Nazare was an accidental discovery we made drilling our third well in the Climax area, and we've subsequently drilled a fourth. It is a new discovery zone, enormously thick, 100 meters plus, so as much as 10 times standard conventional helium well thickness in terms of pay zone, and the aerial extent of which is it's open in every direction. We've defined it over 30 square miles, and part of what we're shooting seismic for now is to continue defining how far it goes. And it's a separate project within our larger portfolio at this point. So we've got at Climax, we've got conventional helium production, and we've got the Nazare zone underneath it. Nazare is different. It's unconventional. It's going to require different wells, different drilling than we've used in the past. So straight verticals don't look to be the answer for that zone. So that's where the modeling comes in. We contracted with the University of Regina's Petroleum Engineering Department, and Dr. Gary Zhao specifically, because of his world-class experience in modeling and designing drilling and completion programs for tight oil and tight gas plays. So what the program is, what it's doing is determining the most effective and efficient wells we can drill to drain the Nazare zone in the most efficient way possible. And what that means is, how can we get the most gas out with the fewest number of wells? So
It almost sounds like that movie, There Will Be Blood, when he was talking about, he puts in his straw and tries to suck out as much as he can. And by the way, all kidding aside, this contract with University of Regina isn't out of convenience because you're in Saskatchewan, they're down the street. I want to read this. One of the top petroleum engineering laboratories in the world, and Dr. Zhao specifically has been brought in on several major products with some of Canada's largest oil and gas companies. So you're talking about real heavy hitters here that will find the best possible solution, correct?
Yeah, no, these guys are the real deal, and these men and women are the real deal, because it's going to be a team. It's going to be led by Dr. Zhao, but he does have a team of engineers that work with him to model this out. So we could have gone anywhere for this. We could have contracted with a number of engineering firms. We felt that the University of Regina and Dr. Zhao and his lab specifically were the best choice for this. I mean, they've presented papers and theories on tight oil and gas production all over the world. So they're highly regarded as leaders in this.
Yeah, no doubt. And what's ballpark? Because none of us have an idea at home of what simulation modeling looks like for something like this. Ballpark, do you guys have an ETA of how long this will take for them to come back with something?
Yeah, it's going to be a sort of a two-phased thing, George, where we're going to start with, let's design what we think won't work, what will and won't. So you get to the sort of the kill point on a wellbore design soon. So we're hoping to have that and have it narrowed down to sort of the winning option by mid-May, with looking to roll it out into new drilling at some point in the summer here. So we're into Q3 probably before we're actually back in the field drilling this new style of well.
You talk about
Nazare. I should explain this a bit more. What we're talking about is not straight vertical wells. We're looking at drilling horizontal wells. We're modeling whether we drill multiple leg horizontals off of a single pad. Basically, everything is on the table. And Dr. Zhao's job is to determine what is the most economically efficient way to produce this enormous zone.
Now, you mentioned that Nazare is different from the conventional zones.
Mm-hmm.
Is the development of one contingent on the other?
Nope.
Do you have to solve one to get to the other? Can you go both at any time? They're not
mutually exclusive. Go both at any time. So we've got 3 conventional wells that we've already drilled at Climax, and we've got the next one booked following spring breakup, which is 2 months from now. So the next well we drill at Climax is going to be a conventional well, while Dr. Zhao and his team worked through the development modeling on the Nazare. So they're totally separate. The conventional ones are straight vertical wells. They're nothing's easy to drill at this depth, but relatively easy to drill. Takes a couple of weeks to get down to depth, and you complete and test, and you're off to the races.
So while we're waiting for production, Andrew, there's going to be a lot of catalysts, a lot of milestones along the way.
Yeah, I mean, so we've got what you can expect from Royal over the next 3 months plus would be, obviously we've got the seismic programs running now. We announced that a couple of weeks ago. We've got one running at Climax and one running at Val-Marie, which is a new project area for us. We'll have those results during the breakup period, sort of April. Probably we'll have all those programs completed and reviewing, and we'll be able to disclose all of that, of course. So that's a big step, and that's going to really define exactly where the most efficient place to drill both the conventional and the unconventional wells at Climax are going. That one is a 3D seismic program. It's the best imagery you can do. The one at Val-Marie, which is a new project area for us, as I mentioned, which is almost adjoining Climax. It's to the southeast a little bit, right along the U.S. border. We're very excited about this one. This is a project that we've had basically since day one. So 2016 was when we picked this up, I believe. And it's
when everybody in the world back then, by the way, Andy, we should talk about blockchain, cannabis, all the new disruptive stuff. Helium, people are like, are you kidding me? You want to? That's why I give you and your team credit this is the mark of fantastic management teams and smart people who create value. They pick up assets pretty cheaply when nobody else wants anything to do with them. Now, you guys had to be patient. You had to baby it. You had to finance along the way, but you're here. I mean, all other things being equal, it should be a pretty big payoff for the company, no?
Oh, yeah, absolutely. I mean, frankly, we have enough land. If we didn't think it was prospective, we wouldn't go anywhere near it. So we've looked at this one as almost the jewel in the crown for Royal since we've had it. It's a bit of a trickier area to work in, though, George. It's the Grasslands National Park runs right through the middle of this area, so there's all sorts of different approvals, et cetera, that you need to do any active work here. But our team has found a way to access very good well sites using existing natural gas well pads. So shut-in natural gas wells owned by somebody else, who are going to let us have access to them to drill our wells. And the purpose of doing that, well, one, it saves us money. We don't have to build a pad, but two, we don't have to disturb any additional area, right? And that's important in this part of the province. So we respect that. We find ways to work within it. So the seismic program we're doing there is a very, very targeted program. It's looking at one specific spot, not the entire land package. Historical documents and geophysics, et cetera, tell us this is the right place to be, and now we're just going to confirm it. And then we'll go.
And that's another probably benefit of the supply chain delay, is that you guys are able to hone this down better, higher, more optimized, and it's really specific, right?
Well, that's exactly it, and that's why we came out with the seismic programs now, recognizing that, okay, we can't bring these things on production on the timeline we anticipated. So let's upgrade our land package to the greatest degree possible while we're waiting. And this is the way to do it.
Yeah, and then once you've got everything in, supply chain's done, you've got wells. Maybe we'll end it with that. I want to ask that question.
Yep.
Have you got wells identified that you want to start producing?
Yes.
How many of you guys? How many do you think? Are you able to talk about how many you think you'll be able to start bringing online?
Well, sure. We'll talk about it by project area first and foremost, because we've got the climax area where we're going to have. We're thinking at least 3 wells to bring online into a facility when it shows up on site. Val Marie, we'll see. I mean, we're not planning a facility for that one yet. We haven't drilled a well there yet, so that one's up in the air. Now over at Ogama, where we drilled 2 wells in the fall, we've got some additional testing to do over there again after breakup, and then we can look to bring those 2 wells on as well. So that's as many as 3 separate project areas within this one small company that could be producing in 2022. It's pretty interesting times for us. I mean, we're learning a lot. We understand the helium industry quite well. We understand exploration for oil and gas exceptionally well. We're learning a few of these other things, such as how to deal with supply chains and even logistics and getting gas cross border when we need to, et cetera. But that's what keeps the job interesting.
Well, look, if you get the windfall on the one side, you got to expect a little bit of extra work on the other side. And I think that, like I said at the beginning, to me, it sounds like it's a great payoff.
Yeah.
The product in the ground isn't getting more expensive for you to take out, but it's gaining in value. So, and you guys are honing and targeting. So I think that's fantastic, and can't wait. I mean, Andy, I appreciate you coming on to give us this great update as to where you are, because this is a really, I think the market needed this just to get this really great status report here. And it sounds great. Last words to you. What do you want to say to your shareholders and anybody watching, listening?
Oh, I'd say, if you're interested in the helium space, pay close attention over the next 3 months. I think there's going to be some pretty interesting things that happen both with Royal and the industry itself. There are some pretty meaningful announcements set to come out in the next quarter that will really take the industry from pure speculation on the junior exploration and production side into the reality where it's okay, now we see what volumes are going to be produced into what kind of contract and at what price, and actual valuation metrics are going to come into play for these companies. And,
well, you've piqued my interest. You piqued my interest with that to be looking. And by the way, we'd be remiss if we didn't remind people that the government of Saskatchewan is firmly behind you and the industry, because their target is for Saskatchewan to be feeding a significant proportion of the world's helium this decade, right?
Yeah, I mean, it's targeted to be 10% of global production by the end of the decade, and I think that's going to be increasing now with what's happened over in Russia and the Ukraine. So
All right.
we keep driving, we keep pushing, and there are other groups doing the same. The government's been incredibly supportive, as you point out. We've made our first submission under the incentive program now, and that's in review. That's an innovation program talking about what we're doing in the Nazare zone. So it's just been a great relationship.
Yeah, well, you can't have anything better. You got great project, you've got wells identified, you've got the economics on your side, you got the government on your side, and you got the macro market just as a massive tailwind. So it looks like all systems are going. I can't wait to have you back pretty soon, Andrew.
I appreciate it, George. Thanks for the time. As always, great questions. Always happy to give updates.
Yeah, man. Hey, it's easy to give great questions when you talk about such a great story. You know, it's hard. It's hard when you're scrambling. You talk about Georgecom widgets. It's like, so anybody going to use George's? I don't know. Then it gets really tough. But this is easy, and I appreciate you taking out the time to speak to everybody because everyone loves these.
Oh, my pleasure.
For everybody at home, you've been watching or you've been listening by podcast on Spotify, Google, Apple, your favorite podcast platform. To Andrew Davidson, he's a CEO at Royal Helium. The company trades in Canada under RHC. For our friends in the US, RHCCF. If you want to do your due diligence, 2 easy ways to do that. First, get to the company's profile on the GORCOM, because we know not many of you understand what helium uses are, the market, and all the factors. So we've got a great story, gives you a good 1,000-foot level understanding of the macro and Royal Helium. And then once you're comfortable with that foundation of knowledge, head right over to the Royal Helium website, do your deep dive due diligence. Hopefully today you discovered your next great small cap company. Thanks for joining us. Have a great day. See you next time. Hey guys, the video's over, but don't forget to help your company by liking it and even leaving a comment below. And then don't forget to help yourself by subscribing to our YouTube channel so you never miss another great Agoracom small cap video.